Thank you for being in this place to be with the CBDC Asset Group. Thank you for being a part of the group, guys. Today we got the launch of the Bitcoin Futures ETF. This is not financial advice. However, if you understand anything about ETFs, understand that they are using your own stupidity against you if you purchase this. Crypto allows us the opportunity to self-custody our financial freedom. Why would you entrust it to a hedge fund manager who's going to take his percentage? I know I shared this Raoul Pal video, but I just wanted to share a couple seconds of it to reiterate what I'm saying about an ETF. Don't believe all the hype in the news and share with family and friends to protect them from this kind of malarkey.
You or I could just go to the exchange and buy Bitcoin, right? We're paying the exchange a little bit of money. That's it. Done. We self-custodied it. Nobody else involved. This vehicle means that the arbitrageurs take their slice. The ETF provider takes their slice. The lawyer who set up the fund takes their slice. The administrator, the auditor. I mean, everybody is taking a slice out of your pie. And we've seen this with stuff like the USO contract, the oil one. The futures then trade at massive contangos. And all that happens is you don't get the performance. And everybody says, well, Bitcoin's up 300%, and how come it only made 100%? Yeah, because you've been screwed. If the SEC really cared about looking after investors, they wouldn't allow these futures contract versions.
By the way, as we're talking, BITO is open with a 41, what is that? Yeah, opening at 41, I guess. We'll track this. Jim?
Yeah, well, I mean, I think it can lead things up, but I think it's a great opportunity to trim because this is true hype today. Now, look, there's guys, the Pomp and Novogratz, to mention the word sell, and this is ridiculous. I think they feel like it's, when Google came public, it was at 88. So what were you kidding? I mean, you sold it for a double, you sold it for a triple, you sold it for quadruple, you're a fool. And I think that they feel that way. But I come back and say, look, I'm up huge, and I'm not greedy. They're greedy, and I'm not greedy. McTeague, I'm not greedy. I think greed is bad. But, you know, I also got rid of my Sill suits and stopped talking about
your Lamborghini
blue horseshoe loves.
Of cheering people down here from ProShares. The ProShares Bitcoin ETF, the futures ETF, is starting trading. Just started a few moments ago. I have to ask you, can you explain to our viewers why you chose to allow a Bitcoin futures ETF to begin trading, but have not yet approved a regular Bitcoin ETF?
Bob, thank you for that question. Just to give you a little context, I think that we in the official sector should be technology neutral, but not policy neutral. And so what we're trying to do is ensure to the best we can within our authorities to bring projects into the investor protection perimeter. And so what you just mentioned, Bitcoin futures have been overseen by our sibling agency, the Commodity Futures Trading Commission, which I was once honored and proud to serve there. And that's been 4 years, and some of these applications came in and went effective. As you said, one of them went effective with regard to those products over at the Chicago Mercantile Exchange that our sibling agency oversees.
I think the important thing here is you've made it clear in the past that this does not have some of the concerns that approving a full Bitcoin ETF would have. You don't have people breaking into exchanges, for example. You don't have problems with fraud or manipulation. Was that a factor? It seems that was a factor in the fact that you went ahead and allowed the Bitcoin futures ETF. You don't have those particular problems here.
Well, while I'm not going to get into any one application or project, I think what you have here is a product that's been overseen for 4 years by a U.S. federal regulator, the CFTC, and that's being wrapped inside of something which is within our jurisdiction called the Investment Company Act of 1940. So we have some ability to bring it inside of investor protection. It's still a highly speculative asset class, and listeners should understand that underneath this, it still has that same aspect of volatility and speculation. But there's our sister agency has overseen this for 4 years, and then it brings it inside, as I said, an 80-year-old law here at the SEC.
And we begin with Bitcoin Buzz, a landmark moment for cryptocurrencies as the first Bitcoin futures ETF starts trading today. Paul LaMonica is following the story for us. This is seen, and Paul, great to have you with us, as a huge stepping stone, I think, in the acceptance of cryptocurrencies by regulators. But you've got to read the small print on this. Just explain what an ETF is on Bitcoin futures.
Exactly, Julia. What we have now is a fund that will invest in Bitcoin futures contracts. So this ProShares ETF and others that might be coming out after it, they are not going to be investing directly in Bitcoin. If you buy this ETF, don't have ownership of Bitcoin. So that is one thing that I think any investor needs to do their homework and realize. But the good news is that more of these funds are likely coming. This probably opens the wave for several funds to eventually be approved by regulators. And also, this brings more regulation to an industry that for some novice investors, they may feel that crypto is a little bit of the wild, wild west, which I don't believe was a Tom Cruise movie. But that's going to be something that is good. So, now you can have your crypto cocktail.
Not a Tom Cruise movie yet, Paul. I'm sure you're giving him ideas there. What's it going to mean for liquidity? Because I think you raise a great point, which is for many people out there, they do see the crypto sector as the Wild West. Perhaps they can't invest in it, but they can invest in exchange-traded funds. And if they want some access, or at least something that mirrors in some way the underlying price movements of Bitcoin or Bitcoin futures in this specific case, this gets them access. What is the upside? What is the downside?
Yeah, I think that the potential upside is that you do open the floodgates for more investors having access to cryptocurrencies who maybe previously had been intimidated. I mean, when you hear stories about how you need to have very high-powered, fancy PCs or servers mining Bitcoin and all the power that entails, that's not something that your average retail investor may be wanting to do. But to be fair, I think that there are some who would also argue that this may not change the playing field that much, because we've already had things like Robinhood and Coinbase and other brokerages that have also made it easier and more accessible for retail investors to buy Bitcoin, Ether, other cryptocurrencies. So yes, the ETFs do potentially make it even easier for investors, but it's not as if we had been in this world where the only way to access Bitcoin before having the ETF was to mine it yourself. You were able to buy Bitcoin.
Don't forget to like and subscribe,
fairly
and share
easy.
with family and friends.
Yeah, and there's obviously going to be additional transaction costs when you're investing in an ETF or an exchange-traded fund as well. So lots to consider here, but it is seen as sort of laying the path perhaps one day to seeing an ETF based on Bitcoin itself, and then the floodgates really open, I think. Paul LaMonica, thank you.